mind? And why do you think we need this subject, or what do we actually learn in this one? Any idea at all? Accounting. What does account mean? Exactly, exactly. Ji, so accounting is where, so obviously it has to deal with financial data. So also we know that since we are, mm, okay, businesses for economics, you haven't started classes, but when you start classes for economics and business, you'll learn that all the things around us in this world, uh, we human beings, we have needs and wants, and those needs and wants, they are fulfilled by using the resources that are around us. The resources that are around us, they can be categorized into four categories: land, labor, capital, and entrepreneurs. So enterprise, the fourth factor, they are the ones who own the business. Acha, so that gives us an idea that in this world, if we look from the business's perspective, we can divide the world into business and businesses customers. So all people around us, either we are consumers or we are businesses who are providing goods and services to the consumers. All right. The accounting that we will learn, it would be for businesses, and businesses we'll see that they take various forms. That's the first thing. The business, it could be a small business which is owned and managed by a single person, as small as that, or it could be a big enterprise with thousands and thousands of employees, and even more than that. Acha. For business, we know that businesses, what they do is they provide goods and services, or goods or services to consumers, and in return, consumers, they provide businesses with the return for these goods and services. Also, when a business it's running, in order to carry out this procedure of providing goods and services to the people and getting money in return from them, they have to manage the business. Okay. So all the activities that a business does, any activity which has or will have a financial impact, that activity is our scope, in the scope of accounting. So any activity of a business which either currently has a financial impact or it will have a financial impact in future, that is what we study in accounting. So for example, let's say you own a business. All right. What business do you own? What do you think you're, I mean, what would you like to sell? Clothes. ठीक है जी. So let's say you have a boutique of clothes, and what you do is you do trading. You don't do the manufacturing. As a businesses, when you study about businesses, you learn about the various types of businesses. All these three subjects, accounting, economics, and business, they complement each other. Since you haven't started the classes of the other two subjects at school, right now, a few things might seem a bit alien to you, but with the passage of time, they'll start making more sense. And whatever you learn in one subject, obviously it would be complementing what you learn in the other. So, and for business and economics, definitely it would help a lot to actually put yourself in the shoes of the people who are actually going through that experience. We'll try to do the same for the accounting as well. So we have a business, and our business is that we have got some, we know some factory. Let's say we know some workers in village who do excellent handicraft. They make really, they stitch really well, really beautiful clothes for women. ठीक है जी. So we purchase from them, and then we sell it to consumers. That's all we do. We purchase and we sell. We do not change those clothes in any way or form other than putting our brand on it. Acha ji. So this is the business, and obviously to run the business, we might need a few employees. So our business has a few employees. The business, as you'll see later on, the business, it would have various functions. Uh, Acha, when we talk about all these things that a business has various functions, it could be that a single person is managing all those functions, or it could be that there are the function or the activity is so huge that you have to employ some people to carry out that function. So for example, if there is a sole proprietor running a small business, he might be carrying out the HR part, the marketing part, the operations part, the finance part all by himself. Or it could be that the business has grown so much, or all these activities, they have so much volume that it's difficult for a single person to manage them all. Acha. Coming back to the case of the business, so this business, it's being run by some person. I am saying that all the activities that this business does which have a financial impact, those will be in the scope of accounting. So, for example, if you buy stuff, yes, it has some financial impact. If you pay wages to someone, yes, it has some financial impact. You have broken some law in the course of carrying out your business and you have to pay a penalty, it has a financial impact. You have bought goods on credit, it has, right now you haven't paid to that. So there are two types of transactions we'll soon see. There are cash transactions and credit transactions. Cash transactions are the ones that you immediately pay for, and credit transactions are the one in which you defer the bill, defer the payment. Achha. So if you carry out a credit transaction right now, there is no financial outflow, but in future there will be a financial outflow, right? Because you have bought the goods from someone and you have told them that I'll pay you a week from now, a month from now, whatever day you have agreed on. So right now, no financial impact, there is none, but in future there will be. So again, this is something that will be in the scope of accounting. So what we do in accounting is a few activities. First of all, the first step is that we record the transactions. Also, before I proceed with this, a few examples of where activities they couldn't have a they do not have a financial impact. So, for example, you are owner of the business and today you are really happy. It has no financial impact on the business. You are a, does it have a financial impact? You're saying you're happy. Acha. Um, next a transaction. Let's say an employee, he after completing his office hours, he just likes to stay around at the office. Okay, he leaves. Let's say an hour later, he just likes to hang around with his friends in the office building. Again, something wouldn't have much of a financial impact unless they're using electricity or such stuff. That's something that would have, but just this activity of being there with someone, you're being courteous to your fellow colleagues, doesn't have a financial impact. So these sort of things, they do not get recorded. Acha. I mean, they do not have a financial impact, so they do not fall in the ambit of accounting. So coming to the accounting of what accounting is, to the concept. First of all, what we do is that there is some event which has a financial impact. So we call this a financial event or event with a financial impact. This event, the first thing that happens is it gets recorded, then it gets organized, then it gets summarized, and then it gets presented. So we'll learn all these things of how we record the data, of how we organize the financial data, how we summarize it, and how eventually we present it. That is all that we are going to learn about accounting. Another good thing about accounting, as perhaps opposed to what you say, the science subjects, is that for science subjects, your knowledge, it develops to the extent that what you have learned in previous grades does not apply anymore. So, for example, in the very junior grades, we learn that things, they are made of wood or metal or cement or such things. Then we say no, they are made up of atoms. Later on, get to learn, no, they aren't even actually made up of atoms. Even atom has got smaller parts, and so on. Your knowledge keeps on evolving. But for accounting, what we learn over here, that's sort of the correct picture. Later on, you'll learn how to carry out more difficult transactions. But what you have learned from now, nobody would later say that that's something old and let's just discard that and here is a new theory. This is what we'll follow. Acha. Another thing to give you, that's this same recording, organizing, summarizing, and presenting, that is for perhaps, let's say, a layman who is taking a bird eye view of the what's happening in the accounting or finance department. He's saying that this is happening. If you ask a finance guy that what are the steps that you actually follow in order to carry out the accounting, and these things we learn little by little, but just to give you a holistic picture right from the start, the first step that happens when there is some event with a financial impact. So what we do to record the event is we say we pass double entry. We learn all this bit by bit. I'm just giving you a holistic picture of what's to come next. Acha ji, after the double entry is by the way passed in T accounts. We'll post double entries in T accounts, and T accounts, they are called T accounts just because of the fact that they look like a T. This is what a T account looks like. So that's why it's called a T account. Acha ji, after T account, these things they go to T accounts, they are contained in ledgers. So this could perhaps be the organizing part. This was the recording part. The ledgers, eventually the T accounts and ledgers, their sums, they get posted to what we call trial balance. Trial balance. And from trial balance, they end up in the financial statements. So that is, so after reaching the financial statements part, the accounting is complete. You could compare the financial statements. You could, for example, do the analysis on financial statements. But accounting, as far as accounting is concerned, once things they get reflected in the financial statements, that's it. And these two, trial balance and financial statements, they are the summarizing and the presentation part. Acha, so all the accounting that we do, it would eventually get reflected. All these financial events, they should eventually be reflected in the financial statements. Okay. Now the question is, what are financial statements? And for a few weeks to come, or perhaps months, maybe, we won't be making the financial statements. But again, just to give you an idea of what's ahead right from the start. So whatever we do, we need to know where it fits in the big picture. So the financial statements, there are actually five statements. The financial statements. Please let me know if I sound too confusing, or I'm using jargon which doesn't make sense to you. Excuse me. Actually, the first financial statement that we prepare is something called statement of financial position. Statement of financial position. You told me your dad works with FBR, right? Does he have a background in finance? Acha ji, all right. Acha. The only reason I asked is that perhaps I could give you some questions that you could ask him and discuss with him. Anyhow, acha, the statement of financial position in the old books and old days, we used to call it balance sheet. So if you ever see the word balance sheet, you would automatically know that they're talking about statement of financial position. Acha ji, the next one that we have, it is called both income statement. Basically, the name is statement of comprehensive income. Statement of comprehensive income. Okay, so these are financial statements. The first one was statement of financial position. The second one is statement of comprehensive income. Statement of comprehensive income, it has also got a few other names. For example, it's also called statement of profit or loss. So this is the statement in which we are actually calculating the profit of a business, how much profit a business makes and how much loss a business makes. Statement of profit or loss. Another name for this thing is income statement, simply. Income statement. So all these names, they are used, and you would know if one is mentioned that what are they talking about. Acha, the third statement that we have is what we call statement of cash flow. Statement of cash flow. The fourth is called statement of changes in equity. Statement of changes in equity. And the last one is simply called notes to the financial statements. They just contain the details of what's already been disclosed in the previous four statements. So notes to the FS, they just contain a description of the previous four statements. I'll show you an actual set of financial statements in just a bit. Notes to the FS. Let me know when you've noted all of this. अच्छा जी, अच्छा जी, अच्छा जी. Acha, let's just learn these FS that we prepare. What are the principles? What's the underlying principle of each statement, or what's the purpose of preparing each statement, or what does each statement it show us? The first statement, statement of financial position, it is written down or it is drawn on the principle of accounting equation. We have an accounting equation in which we say all the assets in the business. You understand what assets are, right? I'll give you a definition for the assets too in a bit, but you have some vague idea of what you could call an asset. So all the assets in the business. So for example, if your business has asset, where could it come from? What's the source of getting the asset? What's the source of finance? Where could it, the asset? You understand that in order to get an asset, you have to pay something, right? So for the assets that your business has, this boutique that we're talking about, so you have got the, let's say, electrical fittings, you have got the showroom, you have got the, let's say, racks and fittings within the showroom. So where did the money, what's the source of finance of these assets? What could be? Acha, there are two possible sources of finance. The first source of finance is that you got all the stuff using your own money. You had some money, you had saved some money for some years, and using that money, or maybe somebody gifted it to you, you had some money in your personal possession, and using that money, you got these assets. The other possible source of all these assets, the source of finance for all these assets, it would be liabilities, that you borrowed money from someone and got these assets, right? These are the only two possibilities. Either you buy stuff from your own money, or you borrow from someone and you tell them that I'm going to do business, I learned from this business and I'll pay you later on. So in statement of financial position, we draw the statement of financial position on this equation. Okay, we show what are the assets of the business, and those assets, whatever the number of assets is, let's say your assets, they're worth $500,000. Okay, so on the other end, there must be either 500,000 all in equity, or 500,000 all in liability, or some mix of equity and liability, which would sum up to give 500,000. Okay, let's say you had 400,000 of your own investment in the business, and you borrowed 100,000, and from these 500,000, you got these assets. Okay, this is the basic underlying principle of what actually we present in statement of financial position and how it is drawn. So coming to statement of, you understood this thing? Any question in this? Any confusion? Anything that you didn't understand? Ji. Moving on to the next thing, the statement of comprehensive income. It is drawn on the simple principle that for a business, they earn some revenue, right? Revenue is the money that they get by selling their stuff. From this revenue, if they deduct their expenses, they'll have profit or loss, right? If revenue they exceed expenses, there will be profit, and if expenses exceed revenue, then the business would incur a loss, right? Simple. Acha ji. For the third statement, statement of cash flow, we'll see different patterns of it, but what it's actually showing is that how cash is flowing in and out of business. What are the different activities in on which the business is actually spending cash? A person not exposed to how businesses actually work, or somebody who hasn't actually studied business studies or economics before, they might think that isn't the profit the same, the statement of comprehensive income, isn't it the same as cash flow? I'm earning something, I'm paying a few expenses, so that's what cash is usually used for. But when we actually see the stuff, we will see that at times that is not the case. But rather, most of the times that is not the case. Cash is flowing in and out of business on a different pattern. Yes, it largely follows the pattern of if a business is profit making, there is a very high likelihood that the cash flows will also be positive, but it wouldn't be that the cash that they're left with at the end of the year, it's equal to profit. That's not always the case. So for statement of cash flow, what we say is that there is opening cash. Achha, I'll modify this particular statement that I'm making, the statement of cash flow pattern. I'm giving you a simple one right now just to make you understand this. Later on, I'll give you a slightly different one. Okay? Just that you understand, I'm giving you a simpler version of this thing right now. Acha ji, we have got opening cash. So, for example, at start of this year, 2022, you had with you $1,000. Hopefully that's not too little. Then during the year, you got some more cash. So there is cash inflow. Cash inflow. Just a second. Cash inflow. How much money did you get during this year? Name a figure. Anything? Yes, madam. Name an amount. Anything made up. $100. अच्छा चलें जी. This was a tough. 1200. ठीक है जी. So you got 1200 more dollars during this year. And then you incurred some expenses as well. So let's say your expenses, for those expenses you had to pay cash, so there would be some cash outflow, right? So your cash outflow, it happens to be, let's say, $700. These were your expenses. Since you're a wise person, you like to save money, you do not spend all that you got. Acha ji, you begin with how much? You begin with $10,000 or 1000. What was it? I forgot. It was 1000. Dollar 1000. ठीक है जी. 1000 you had, 1200 more you got, 700 you spent, and then you'd be left with closing cash, right? This is the cash that you'd have at the end of the period. So what do you get? 1000 plus 1200 minus 700. Yes, madam. Calculator, quickly. ठीक है जी. $1500. So this is largely how we prepare the cash flow statements. This is the sort of information, that's the crux of the information that's there in the cash flow statement. Pattern we would study in detail a bit and we would modify it a bit. But this is largely the underlying principle. Okay? That you have some cash, then there is some cash inflow, there is also some cash outflow. And if you want to calculate the closing cash position of a business, you have to add cash inflow to the opening cash and take away cash outflow. That will give you the closing cash position of the business. Agreed? Any question, any confusion? All right. Acha ji. Since cash is an important aspect of a business, we like to prepare a separate statement on just the item of cash. Okay, and we present this whole statement. The same way cash is important, in this, the original accounting equation that we wrote, assets are equal to equity plus liabilities. Equity is whatever's the money owners have invested. There could be one owner, there could be more than one owners. So whatever's the money that owner has invested in the business, how has that money changed during the year? How much more investment has he made? How much investment has he withdrawn? What's the increase in his investments because of profits? How much dividend has been distributed? All these things. So a movement of equity, this is separately shown in this statement of changes in equity. Okay. And the last one is notes to the financial statements. It would just contain details of what's already been mentioned in the first four statements. So give me a second. Let me show you an actual set of financial statements. and then we'll move forward. Financial statements, NRL, financial statements. अच्छा जी, so this is a business in Pakistan, National Refinery Limited. They refine crude oil and they make petroleum products out of it. The diesel, the jet fuel, the motor gas, the petrol that we use and everything. So this is actually the institution which makes petrol. अच्छा जी. Acha. So the complete set of financial statements, it's presented with the annual report. They give a lot of description of the business and stuff. So it would contain all these things. It would from this page 52, hopefully the statements, the audited financial statements, they would be. Acha, audit isn't really a part of your syllabus, but just to give you an idea, if you are a business and you make your financial statements and then you come to me and show me your financial statements, I'll say that you yourself, you run the business, you have yourselves prepared these financial statements. How can I place reliance on this? I don't know you. How do I know if you have prepared these financial statements right or wrong? So that's where the role of auditor it comes in. Auditor is someone who is unrelated to your business. So let's say Roshane, she isn't related to you. So you approach Roshane and you ask her that these are my financial statements. I would like to engage you to audit and check these financial statements and then give me a certificate whether these financial statements they have been prepared correct or not. Okay, and she, since she isn't related to you, as in this made up scenario, so I would then perhaps place reliance on these financial statements because they have been verified by a third person who is expert in this field, and they have also said that these statements are true, so now I have to place reliance on them. So that's what the role of auditor is, and that's what the auditor report it mainly says, that these financial statements they have been prepared in a correct manner. Acha ji, we aren't really concerned with audit report right now. Acha, this is the statement of the financial position. Without going into all these details, here is assets, assets of the business. We will soon learn the assets. They can be distributed into current and non-current. That's something for later on. And this is the total assets position of the business, that they have assets worth 75 billion. These statements they have made in thousand. So this is 75 billion. 75 अरब के इनके पास assets हैं. Okay. And then it gives the position of equity and liabilities of the business. They have got some equity, that's the investment of the owners in the business, residual interest of owners in the business. They have got some liabilities. Again, there is something called current, non-current, which we currently don't know. We'll soon learn about that. And once we add all the equity and liabilities, it turns out that it is precisely the same amount, 75,681,516, which it was for the assets. So it will match dot to dot, rupee to rupee, penny to penny. Okay, so the total assets they would be matched by total equity and liabilities. For financial statements, there is a requirement. I'll get to that in a bit. So this was their statement of financial position, the first one. Then here is the statement of profit or loss. I told you that different businesses they use different names. They could have used the name of statement of comprehensive income. In fact, they prepare a separate one if I other comprehensive income. Anyhow, so this is their business. They tell that these are all the revenues that they got. From these revenues, they deducted various types of costs that they incurred, and at the end of the day, different expenses. They have some profit or some loss, right? So this is their profit for current year. Acha, acha. This then let's move on to the third statement, which is statement of cash flow. So I don't expect you to remember it all in just one day, looking at it just once. Uh, you'll get to know about it. I've said this before, I'll repeat it, that we'll learn all these things over a period of 1 year. But this is again a bird's eye view of what's about to come. Acha ji, so this gives the statement of changes in equity. There is some share capital. During the year, there was some movement, and at the end of the day, they have the total capital again. So if I show you, these are the financial statements for the year June 30, 2021. Their total capital, their total equity, it comes out as 31,587,387, right? And if I go back to the statement of financial position and look at the equity over there, 31,587,387, the same sum of equity. So it's just a breakup of what's mentioned over here. Okay, so that was statement of changes in equity. And finally, we have got statement of cash flow. So here they say that from these three different types of activities, there are some financing activities, some investing activities, some operating activities. Each activity, it generates some cash, and at the end of the day, they're left with this much cash. Okay. Acha, along the way, you must have noticed that for certain amounts, there is a note heading and then some number mentioned over it. So this says that if I go to the fifth statement, which is the notes to the financial statement, and I go to note number three, it will contain detail of this particular number. If I go to perhaps note number eight, it will contain detail of this number, what it's actually made up of. Sorry, this is the last thing that we look at in these financial statements. So let's say we look at stock and trade. They have 21 billion worth of stock in trade. But stock and trade, that's something that we'll look at later on. But do you know what's stock and trade? These are the items basically which you are going to sell, selling which is your main business. So for example, for your boutique, all the ready-made clothes ready to sell that you had, or even the, since you were in the trading business, you'll only have the ready-made clothes. But if you were a manufacturing business, some of your clothes, they would be in raw material form, just the cloth, the unstitched, uncut, and some they would be half made, half finished, and some would be ready made. So these are the three types of inventory or stock in trade that a business has: raw material, work in process, and finished goods. Obviously, we look at it in detail later on. Acha, just right now, I want to show you the note number 9. Acha, 21,403,625. Note number 9. So these are notes to and forming part of the financial statements, the same notes to the FS that I told you. If I go down to note number 9, I'll see the detail of what's in here. Acha ji. See, the same thing that I told you, that they've got crude oil, which is the raw material that they get, the unprocessed raw form, the crude oil that they've got. And then from that crude oil, they've got some semi-finished products. And then there are some finished products that are just ready to be sold. So this is the number that we looked at above, 21 billion, the breakup of that inventory. And then they have got some more information written down about this inventory. Okay, ji. So this was a brief look of what the financial statements of a business they actually look like. Acha ji. Now that we have got a overall view of the business, uh, there are a few things. चलें ठीक है ठीक है. You'll keep me updated about what you have learned in business and economics at school, because I would keep relating it with what we are studying over here in accounting. Okay, so that way it would be easier for you to remember things. Acha ji, coming to the accounting. For accounting, we have got all the accounting that we do, anything at all in accounting. It falls in one of the five heads of accounting. Any number that is there in accounting, there are five heads of accounts or five heads of accounting. And there are certain rules to record each of them. Acha ji. First, let's name down those five heads. The first head is assets. Acha, have you bought the book that I asked your mother that you could buy? Have you bought your book for accounting? You haven't? Acha, you bought it from Pakistan. Which one did you buy? The one that you took a picture of, or the one that I sent her a picture of later on? चले ठीक है ठीक है. अच्छा जी, whichever it is, as soon as you get it, you let me know. अच्छा, for today we'll manage without it. अच्छा जी, these five heads of accounts. Uh, the first one is assets. What are assets? Assets are the um, items which are owned and possessed by owned and controlled by a business, items owned and if you could note down these definitions on a separate page, because if let's just note down the definitions over here and I'll give you the other details later on. Items owned and controlled by a business which would provide some benefit in future. Some benefit in future. Let me know when you have noted down the definition, then we'll discuss examples of it. ठीक है जी. What do you think could be the example of assets? Machinery, excellent. What else? There could be machinery, there could be premises, the place which you own where you run your business. If you own the place, then it would be your asset. If you don't own the place and you have just rented the place, then it wouldn't be your asset. It would be the asset of the person who owns it, right? You could run your business out of a rented place too. You understand that, hopefully. Acha ji. The same way, machinery, there could be vehicles which are owned by the business. Acha, then we have, let's say, trade receivables or debtors. What are trade receivables or debtors? Trade receivables. So in accounting, we have got two types of transactions. There are transactions, this is a slightly side note. Acha ji, the transactions that we have are of two types. There are what we call cash transactions, and there are what we call credit transactions. Cash transactions are the ones in which you get the good or service and you immediately pay for it. Okay, so simple to understand. I go to a shop, I buy some stuff, I pay them right then and there, I get my stuff. That is cash transaction. I buy something online, they deliver me the stuff, I pay to the person who delivers it to me, or I pay it in advance to them. ठीक है जी. By the way, advance payment जो है वो credit transaction में आएगी, but let's say cash transactions, easy to understand that you're buying the stuff and you're paying them immediately. Credit transactions are the ones in which there is a mismatch between getting hold of the goods and the payment. Okay, so for example, right now this is the month of September, right? At your home, you're using electricity. When would you get bill for this electricity that you have used during the month of September? In October, let's say 5th of October, and then they'd give you some time to settle it, let's say a week. So by 12th October, you can settle this bill for the electricity that you have already used. So you have already used and received the goods and services, but you have deferred the payment. The payment has been deferred. Okay. Similarly, in business, it's quite common that you buy stuff and you say to the person you are buying it from that I'll pay you later. The same way, people who are buying from you, they'll buy stuff and you will defer the payment. That it's all right to take these goods. You pay for these goods a week from now, 2 weeks from now, whatever your agreement is. So whenever there is mismatch between the payment and getting hold of the goods, that's what a credit transaction is. Or in other words, you could say where the payment is deferred, those are the credit transactions. The first definition was better. Anyhow, so in trade receivables, what happens is that you sell goods and you defer payment. So these people who owe you money, whose payment you have deferred, who you have told that they can pay you later on, these people, they are the money that you owe from them, that's your asset. Okay, now because you've got a legal right to receive this money, you have sold them goods, so that gives you a legal right to receive that money from them. So since there would be some cash inflow in future, so this gives you the asset of trade receivables. That's what it is. If you look at the other end of the transaction, so for example, I come to your shop and I say that I like these dresses. However, I'd like to take five from you right now, and I'll pay for these dresses 3 days from now. Okay. For you, this has given rise to an asset trade receivable, that you've sold goods and you'll receive money for these later on. For me, it has become a liability. You can say that, Saad, you owe me money, and Saad, can say that I owe you money. So for one person, this is trade receivable. For the other person, it's a liability, and it would be trade payables. Again, we'll look at that later on in trade payables. Asha, other types of assets that we have, there is cash and bank, the physical cash that you're holding, and your bank accounts. They're also your assets. This money you can use later on. Asha, similarly, the inventory that you have, or stock and trade, as you mentioned, the in the items that you've got possession, and the items that you possess that you'll sell later on, and you'd earn money from that, these items, they're also your asset. ठीक है. अच्छा, the next item that we have got in heads of accounts, or heads of accounting, the second head of accounting is um, equity. Equity. So for equity, I'll just write down the definition. I'll hold the explanation for a bit until I've explained liabilities. The definition of equity could be residual interest of owner in a business. Residual interest of owner in a business is called equity. Actually, what exactly it means, that what's the residual interest, I'll explain that in just a bit. Noted? The third item that we have got is what we call liabilities. And what would be liabilities? G, an obligation to pay people outside the business. An obligation. So since it's liabilities sum, this would be the sum of obligations that a business has to pay to parties outside business. ठीक है जी, noted. अच्छा जी, for these heads of accounting, अच्छा, for the first three that we have learned, you remember the equation we said a while back. Assets, the total assets of a business, they are equal to the total equity and total liabilities. That's where assets come from, either from the equity or from liability. If I rearrange this equation a bit, that these are the assets, and from it I deduct all the liabilities, I'll have equity on this side, right? So what this equation tells me, that all the assets that I have right now, if I pay back all the liabilities that I owe, then what remains is what belongs to the owners. And that is what equity is. That is the residual interest of owner in the business. That from the assets of the business, if they settle all the liabilities, whatever remains is their interest, or their ownership, or their possession, or their stake in the business, right? ठीक है जी. Equity and liabilities, let's discuss examples, or the way this would appear in the financial statement. So for equity, one is what you have as share capital, or simply the capital. And this term capital is a bit confusing. Throughout the course of economics and business, you'd learn a few different meanings of capital with minor changes. There would be working capital, there would be capital employed, there would be just the capital itself, it would have a few meanings. So brace yourself for that. Actually, there could be share capital. There is something called, let's just discuss easier to understand things. Retained profits. If you have got any profits you earned a profit in 1 year, you've got two options: either to withdraw that money from the business or to reinvest that money in the business. If you reinvest it in the business, that would take the form of retained profit, right? अच्छा जी, share capital, retained profit, profits for the year, retained profit and otherwise profits, if even the profit for the year as well. This is, there are other items too, but I don't want to mention those right now. They might sound a bit confusing. Or let's just write them down. We won't write the description. If you have got share premium, for example, that's also an item in equity. And let's just pause at that. ठीक है जी. So these are the three oft-cited items in equity. अच्छा, for liabilities, what are the usual form of liabilities? जी, any idea? Excellent, excellent. If you have taken a bank loan or otherwise loan from someone, that would be a liability. What else? Trade payables we mentioned. Trade payables are the people from whom we have bought inventory. So this person who sold, so you just sold three, let's say, ready-made suits to someone, and that person, he said that he would pay you later on. So that person, so Saad would appear as a trade receivable in your book. And let's say Saad wants to use these clothes for his own business. He wants to just resell them. So for Saad, you would become a trade payable. Okay. There are other payables. I mean, okay, there is something called accrued expenses. So one simple example of accrued expenses is when you have, for example, incurred an expense but haven't paid for it right now. The same electricity bill that we discussed, it could be an example of accrued expense. Okay. D, I wrote additional, it would be just accrued expense. Acha, the same way, if you haven't paid for something that you have used right now, but you have gotten hold of the thing, this gives rise to a liability, accrued expense. The same way, it can be a situation that you paid in advance for an asset. So it will be a prepaid expense. A prepaid expense is an asset. Okay, so for example, my uncle, he lives here, but for long periods of time he's outside Pakistan. So what he does is he goes to the maintenance services office and pays them a lump sum amount, let's say 100,000. Okay, and he asks them to settle this amount for any upcoming bills. So he hasn't incurred that expense yet he pays it in advance, so that in his absence they do not cut off his connection. So since he haven't used this thing yet, he hasn't actually incurred the expense yet. As of now, it takes form of prepaid expense, and as of now, this would be an asset of the business. Okay. अच्छा जी. अच्छा, one more liability which I'd like to discuss. अच्छा, leases, they can take form of liabilities, payments for leases. So for example, you buy a house on lease, you buy machinery on lease, you buy a vehicle on lease. All these leases, they usually end up giving rise to liabilities in your books. Acha, the last one is bank overdraft. Do you understand what bank overdraft is? Acha ji, write it down, then I'll give you the explanation. ठीक है जी. For bank overdraft, let's look at a simple story. So you have $1,200 in your bank account. Okay, you are a business, and the same boutique business. So you have been in business for let's say a decade now, and since day one, you have kept your bank account in this particular bank. So the bank has seen money coming in and going out of this particular bank account. Achha, if any given day you have $1,200 in your bank account, but you need to make a payment of $5,000, would the bank allow you to make this payment? It would. Achha, for ordinary circumstances, for any ordinary person, it might be that the payment would be declined. But for a business, and usually this is a facility that sometimes business, they agree with the bank that we want to get this facility. So what happens is they have they know that you're a legit business. They know that money, it flows in and out of your business, and they know the pattern that usually towards the end of the month you are in a crunch, and at times you have to make these payments. So knowing all this, they'll give you the facility, and now they would allow you to make a payment beyond your actual bank balance. So what would happen if you make this payment, 5,000 minus 1,200, what would you get? 1,200 minus 5,000. 3,800. So now your bank balance would appear as 3,800 negative. Okay. And usually your bank balance is your current asset. But now, since you have overdrawn the money, you owe bank this money that you have overdrawn, right? It has become a liability. And this is what we call a bank overdraft. And now, after this, whenever, let's say the next month you deposit $4,000 in your bank account. So now your bank balance, it would appear as $200, because they'll first settle this $3,800 that you owed them, and the remaining they'll show as your balance. So until you have overdrawn from the bank and until you owe bank money that you have drawn in excess of what was there in your bank account, it will become bank overdraft, and it would be considered a liability instead of being considered an asset. All right. Asha ji, we have noted down three items. The next one that we have got is expenses. Fourth, head of accounting. Expenses are the past or present outflows which, nahi, nahi, wait a second, let me give you a better definition. Hmm, hmm, hmm. Hmm. ठीक है जी. We can say uh, money spent or cost incurred by a business. Money spent or cost incurred by a business to generate revenues. Acha ji, what could be the examples of different expenses which are incurred by a business? Excellent. Purchases, wages, purchases, wages, for example, marketing expense, for example, utilities, water, heating, electricity, etc. For example, finance cost or interest expense, printing, stationery, etc. that's used by business. So these are all expenses. Acha ji. Then this leaves us with the last head of accounting, and that is, excuse me, अच्छा जी, revenues. So what are revenues? Ji, what do you think are revenues? Any idea? Excellent. So the present or future cash flows generated by business in return for offering their goods and services. Cash flows generated, yeah, money earned by a business against offering their goods and services. ठीक है जी. So these are the five heads of accounting. So all the accounting that we do, it would remain within these five heads. Any item that we encounter, it would be an asset, equity, liability, expense, or revenue. Acha, I'll keep the class till here with regards to the explanation, how we actually do the accounting, or what are the rules using which we do the accounting of all these five items. Those we'll discuss tomorrow. Acha. What I'd like to do right now